This week, the head of the central bank, Jerome Powell, testified in front of Congress. Unfortunately, with a lot of hawkish comments, the market didn't react well at all, with nearly every stock going into a sea of red. Now, the reason it's so important to keep an eye on what Jerome Powell is saying and doing is because it determines where the prices of stocks and crypto will be going over the coming weeks and months. And so in this video, we're going to take a look at the 3 biggest takeaways and also how they're going to impact the markets, including first, Powell's overview of the current situation, which was very gloomy. Then, when asked, the Fed chair shares his thoughts on crypto. And then we'll finish up with a bombshell by Senator Elizabeth Warren, indicating another big downturn is still to come. As always, if you do enjoy anything in the video, then drop a like, and a big thank you to everyone who does. Okay, first up, what was the TLDR from Jerome Powell, and how will this impact stocks and crypto?
With inflation well above our longer run goal of 2%, and with the labor market remaining extremely tight, the FOMC has continued to tighten the stance of monetary policy, raising interest rates by 4.5 percentage points over the past year. We continue to anticipate that ongoing increases in the target range for the federal funds rate will be appropriate in order to attain a stance of monetary policy that is sufficiently restrictive to return inflation to 2% over time. In addition, we are continuing the process of significantly reducing the size of our balance sheet. We are seeing the effects of our policy actions on demand in the most interest-sensitive sectors of the economy. It will take time, however, for the full effects of monetary restraint to be realized, especially on inflation. Although inflation has been moderating in recent months, the process of getting inflation back down to 2% has a long way to go and is likely to be bumpy. As I mentioned, the latest economic data have come in stronger than expected, which suggests that the ultimate level of interest rates is likely to be higher than previously anticipated. If the totality of the data were to indicate that faster tightening is warranted, we'd be prepared to increase the pace of rate hikes. Restoring price stability will likely require that we maintain a restrictive stance of monetary policy for some time. The historical record cautions strongly against prematurely loosening policy. We will stay the course until the job is done.
So, as you heard, there was a lot of hawkish comments coming from the Fed. Although it's been going well, there's still a long way to go. It's likely to be bumpy. Latest data's come in stronger than expected. The final rate hike is now probably going to be higher, and they won't be pivoting anytime soon. Obviously, this was not good for the markets, and this is not good for the coming weeks and months either. Next up, the Fed chair was specifically asked about crypto, and was he pro or con? Here is what he said.
So this is something we've been quite active in this area, and I'll say that we believe that innovation is very important over time to the economy. We don't want to stifle innovation. We don't want regulation to stifle innovation in a way that just favors incumbents and that kind of thing. But like everyone else, we're watching what's been happening in the crypto space, and what we see is quite a lot of turmoil. We see fraud. We see a lack of transparency. We see run risk. Lots and lots of things like that. And so what we've been doing is making sure that the regulated financial institutions that we supervise and regulate are careful, are taking great care in the ways that they engage with the whole crypto space, and that they give us prior notice. And we've issued, along with the FDIC and the OCC, a number of issuances of notices to that effect.
So, although he admits there has been a lot of mismanagement and fraud, I would say he is a fan of crypto, and he wants it to be built and developed in the US. So it's really good news that the head of the central bank in America is a fan of crypto. Okay, and to finish up, there was a huge bombshell dropped by everybody's favorite senator, Elizabeth Warren, and she went straight for the jugular.
There have been 12 times in which the unemployment rate has increased by 1 percentage point within 1 year, exactly what you're aiming to do right now. How many of those times did the U.S. economy avoid falling into a recession?
You know, it's not as black and white as very
Just
very
looking at the
infrequent.
numbers, it actually is pretty black
Alan
and white.
Blinder's written a book on this, and
There have been 12 times that we've seen a 1 point increase in the unemployment rate in a year. That's exactly what your Fed report has put out as the projection and the plan based on how you're going to keep raising these interest rates. How many times did the economy fail to fall into a recession after doing that? Out of 12 times.
I think the number is 0.
I think the number is 0. That's exactly right.
This week, Jerome Powell testified in front of Congress, and there was a lot of hawkish rhetoric. It's got a long way to go. It's likely to be bumpy. Latest data's come in stronger than expected. The terminal rate is going to be higher, and they won't be pivoting anytime soon. When asked about crypto, the good news is that overall, Jerome Powell is a fan and would like it to be built out in the US. And Elizabeth Warren dropped a bombshell saying there's been 12 times when the Fed has done exactly what they're about to do right now, and every single time it has led to a recession. And the bad news is that recessions are terrible for stocks and likely risk assets like crypto. So there you are, guys. Hope you enjoyed. Those were the latest comments from the Fed. Let me know what you think below. But for now, just to say, if you did enjoy anything in the video, then drop a like. And a big thank you to everyone who does. And I'll see you in the next video. Bye for now.